roughly 80 to 90 million each year, which is high, but I was the first to do this trade. Watch, it will pay. I may have been early, but I'm not wrong.
In Peter Schiff's recent podcast, episode 738, Inflation Burns While the Fed Fiddles, his comments are eerily reminiscent of the 2015 film The Big Short. The way he describes the current relationship between the US dollar, gold, and the Fed's money printing is very emblematic of The Big Short, right before the 2008 housing crash. In the movie, as the bubble inflates, the sentiment is utter despair and confusion. All three of the movie's main characters are in shock and seemingly ready to bash their heads in a wall at the level of fraud they're witnessing. Nonetheless, all of them refuse to dump their positions and hold until the end, even at great risk of their funds imploding. There are multiple scenes and lines in the movie that illustrate the complete backwardness of the situation they're in, such as when Burry is on the phone with Goldman.
Where do you have our position marked?
I think it's the same, Mike.
What? Can you explain that to me, please? Because how can the value of an insurance contract not be affected by the demise of the very thing it insures?
They're independent markets. They're not always correlated. I know it sounds odd, but these are very complicated products.
They are correlated.
To briefly summarize, homeowners with adjustable rate mortgages saw their rates skyrocket, then they defaulted on their loans, cash flows to CDOs dried up, CDO managers couldn't pay their bondholders, and the owners of the insurance contracts, the credit default swaps, got their big payouts. In another clip in the movie, Charlie and Jamie are just as confused as everyone else.
I just had to wire Bayer and Deutsche $70,000. It's like 2 + 2 = fish.
It's rigged. You bought into a rigged game? Gonna lose everything? I'm gonna have to move back in with my mom.
The confusion continues throughout the movie as it builds up to the collapse.
Mark, you there?
Yeah,
Hello?
did you hear? Mortgage defaults have gone through the roof. Is anybody jumping off the buildings yet?
Why would they? Subprime mortgage bond prices are up.
What?
Bennett wants 1.9 million more in collateral by close.
Venn is asking us to post collateral.
What the hell is going on?
We don't know. But Deutsche is on the phone demanding payment.
Fast forwarding to today, Peter Schiff appears to be echoing the same confusion. Peter, for some time now, has been talking about the Fed's loose monetary policy and inflation. He is very critical when it comes to the Fed's policy, and for good reason. Recently, he's continued to harp on the Fed talking about tapering, meaning the Fed is all smoke and mirrors, and that if the Fed had the tools they speak of to fight off or slow inflation, they would already be using them. There is no point in taking a gamble that inflation is transitory and risking that much destruction.
Because I've been saying it's a bluff. He's got no intention of raising interest rates and fighting inflation. But of course, the one thing he can't do is admit that. So he's got nothing in his hand. And so he has to bluff. And so he pretends he's going to fight inflation. But I keep pointing out that if the Fed could fight inflation, it already would have. I mean, it doesn't make any sense to sit idly by and watch all this happen. If you really have the tools to stop it, you would use them. You wouldn't just be betting it all on hopes that this is all transitory, especially when you know you're making an all or nothing bet, because if the Fed bets wrong, it's economic Armageddon. I mean, can you imagine if the Fed waits until inflation is 10% and then finally tries to fight it, put that genie back in the bottle, the damage that would be done to an even more over-leveraged economy? No. If the Fed really had the ability to use these tools, it would be using them. It would be doing something to prevent inflation from getting much worse right now. There would be no reason to take a chance on it being transitory unless you felt the consequences would be so bad of fighting inflation now that you got no choice but to bet it all on transitory. And that tells you how bad it would be to fight the inflation now if the Fed doesn't want to do it and is willing on taking a chance that it's going to get much, much worse. And imagine how bad it's going to be if the Fed were to fight inflation after it got much worse. Because if it's afraid to fight it now, how's it going to do it later? It's not.
Essentially, the Fed is doing what it always does: kick the can down the road, hoping that they can delay the inevitable for as long as possible. What Peter Schiff often describes is that the Fed is stuck between a rock and a hard place. If they continue to print money, there will be more inflation. However, if they stop printing money, the economy will go through a recession, but if there is high inflation, they will be forced to raise interest rates, which will also put the economy into a recession and crash the stock market. So basically, no matter what happens, there will be economic turmoil. The only question is, how bad will it get, and for how long can it be delayed? Peter often says that the longer the Fed waits, the worse the turmoil will be, and that it would be best to slow the printing of money and raise rates, stopping inflation and going through a recession now. The longer the Fed waits, the bigger and longer the recession will be.
But Bullard actually came out and said something honest for a change, although understated, but honest. He said that higher inflation is here to stay. He basically admitted that the CPI numbers are not going to fall back to 2%. And he said that we had better get used to higher inflation for some time, like an extended period of time.
The hedge that Peter often touts as a way to survive and thrive during the coming economic hardship is through gold, silver, and gold mining stocks. Gold has historically always been looked at as a store of value and hedge against higher inflation and economic recessions. However, as Peter goes on to describe, like in The Big Short, these classical relationships are completely inverted.
But it's not just gold that is ignoring reality. I mean, look at the dollar. The dollar's not going down.
So subprime loans go bad, but subprime bonds, which are made up of subprime loans, are more valuable?
No. They want another 1.9 million by market close.
What about the ratings agencies? Moody's, S&P, are they downgrading the CDOs or mortgage bonds?
Where are the ratings agencies at?
They're the fucking same.
Nope, they're all still AAA.
What the hell? Are you fucking kidding me? Those fuckers, those motherfuckers.
Mortgage defaults have done nothing but go up. Yet you quote us a higher price on the bonds. Please explain that to me. There's no way that makes sense. There's no way you're marking these swaps appropriately. I mean, why shouldn't we back out of this trade right now?
As inflation rises and it becomes increasingly obvious that Fed cannot contain it, the price of gold should be soaring, and yet it continues to stagnate.
Delinquencies went up and the CDOs got more valuable. Unbelievable.
We know.
Unbelievable.
It's completely backwards.
And for some reason, no matter how wrong Fed governors have been in the past, remember Ben Bernanke, don't worry about subprime, it's contained, right? So Fed was completely wrong there, yet for some reason, none of the Fed's credibility is lost. And so when Powell says, don't worry, inflation is transitory, and if it's not, we've got the tools, we're going to fight it, the market believes it. And so all this inflation, all the evidence that it's getting worse, instead of buying gold and buying gold stocks, they're selling gold and dumping gold stocks, expecting the Fed to do something.
We can do triple B level swaps at 500 basis points, maybe.
You're pricing the swaps like the bond is going to collapse, even though the bond value is going up? Really?
Sign of the times.
What the hell is going on?
Peter also mentions how the people that were right are the ones not getting paid. Also very similar to The Big Short up until the collapse.
I should be making even more money on my gold stocks, but I'm not. And I think a lot of other people are very frustrated because they were right and they're not getting paid. This statement from Bullard should have basically been an eye-opener, and people should have just started dumping dollars and buying gold. Historically, if there is a unexpected increase in inflation and the Fed gets behind the curve, the biggest beneficiaries are gold mining stocks. But it's not happening. Everything that we thought was going to happen in the economy, with inflation, with the deficits, it's all happening, but we're not getting paid.
The bonds aren't going down. They won't move. It's possible that we're in a completely fraudulent system.
Or you're wrong.
Sure. It's possible. I just don't know how.
The question today is, how long will this inversion carry on for? In The Big Short, it did not last long, and ultimately, the ones who saw through the inversion were the ones that got paid.